Darren, MLPs are a great tax-free investment, but why invest in them now?
Well, Lindsay, right now is as good a time as any. I think MLPs just fit well into a portfolio. But if you look at MLPs and taxes, MLPs are tax-driven entities from the day they were created. They were created in 1986 by an act of Congress, and it was actually the Tax Reform Act of 1986, tax, MLPs, they go hand in hand. And what it created was a pass-through structure like REITs. So MLPs don't pay corporate income taxes, and right now a corporation pays a 35% federal corporate tax rate. And what that means for an MLP is they have more money to distribute to investors, which boosts the yield of the underlying partnership, which hopefully creates more demand for MLPs.
So do you recommend investing directly into the MLPs or through ETFs? I know there's two different ways you could do it.
If you invest directly in an underlying partnership or MLP, the benefit is you get 100% of the income from the underlying partnership, the high income I mentioned before. It's also tax deferred income, meaning, generally speaking, 80% of the income that you receive, you do not pay taxes on it until you sell the underlying partnership. Those are the benefits. The cons, right, the disadvantages are the income that you receive is K-1 income, meaning it's a little more difficult to file your taxes, number one, and K-1s create bad income for IRAs, 401ks, or any tax-deferred account, which generally prefers investors who have these accounts from investing in MLPs.
Okay, and so what about the ETF? What are the pros and cons there?
Okay, so the benefits of an MLP ETF, they're structured as a C Corp.
Okay.
Again, for tax purposes. So the benefits are it's pass-through of the income from the underlying partnership, number one. The second benefit is that you are retaining the underlying tax characteristics, the deferred tax income, so the distributions that are paid from an MLP ETF are either 100% return of capital, or on the other side, they're taxed as a qualified dividend income, which currently pays a 15% tax rate. So it's tax sensitive or tax advantaged income. The third and fourth benefits actually address the problems of investing directly in a partnership or MLP. And what that is it simplifies your tax filing because we do the taxes for you at a fund level. We take all the K-1s and produce one 1099, which is simplifies your tax filings.
Absolutely.
Very important. And number two, it creates good income. So the fund structure, the ETF fund structure or C Corp MLP fund structure is good for IRAs, 401ks, and tax-free or entities, tax-exempt entities.